Welcome to the Secrets of College Planning. I'm your host, Anthony Uva, and today we're going to get into some insight in 529 plans. My guest today is Patricia Roberts. She is the COO of Gift of College, and welcome to the show. Welcome to the show.
Thank you for having me here today.
Yeah, so where I usually start my guests is where they went to college, and we know, because you've been here before, we know that you've gone to Duquesne University, but we're here to talk about your book, which is A Parent's Guide to Saving for College and Career Training with 529 Plans, correct?
That is correct.
Yeah,
yes.
So she's also the author of this book. And so what prompted you in writing the book?
Well, it was 2020, the spring of 2020, where you may recall there was a global pandemic going on. And I suddenly found myself, really for the first time in ages, with some extra time on my hands, working at home for the first time ever, and not having really any business travel or any business meetings to be going to. So I had extra time on my hands. I had just seen yet another survey that indicated nearly 65% of American families indicated that they're unfamiliar with 529 college savings plans. Mm-hmm. And with that in mind, I thought about writing a book. I'd always liked to write, and I thought, if not now, when would I possibly have the time to consider writing something to help families? And I've worked with these plans for over 25 years, and I continued, regardless of the survey I had just heard about, I continue to hear from people over and over again that they only wish they had known there was a convenient way to save for higher education. So I thought, now's my chance to start writing, and that's what I did.
Ah, fantastic. So give a sense of what is a 529 plan to everyone.
Sure. So a 529 college savings plan is named after Section 529 of the Internal Revenue Code. And it's a special type of account in which individuals can designate or earmark money for a particular purpose, and that particular purpose is higher education. And what's special about these accounts is that when they grow in value, the earnings are not taxed, as with other types of savings and investing accounts. And in fact, as long as the funds that are contributed, when withdrawn, are used for a wide range of higher education expenses, those earnings are never taxed. So these make these plans very favorable in terms of the tax status of them. And it gets even better. Over 35 states and the District of Columbia have an annual state tax deduction or credit for contributions to 529 college savings plans. Wow. In fact, your state of New Jersey just recently added an annual state tax deduction of up to $10,000 a year for families earning, I believe, under $200,000 in household income.
Wow.
Anyone can invest in a 529 plan. It's not at all income driven. But for some of these state tax deductions, they do limit it to individuals earning a certain amount, as in New Jersey. But there's that favorable federal tax treatment, the tax-free growth, the tax-free withdrawals, and the state tax benefit that makes these really special. And one other aspect of 529 plans make them very special, in my view at least, the account owner with a 529 plan always stays in control of those funds. So unlike other types of savings and investing accounts that parents sometimes use to prepare for their child's future, where the money becomes the child's money upon reaching the age of majority, either 18 or 21, that's not the case with the 529 plans. The account owner is always in control. So the parent or grandparent, whoever owns the account, really decides when and to what extent to begin withdrawing funds. The child cannot run off with these funds and do something entirely different.
So now, are the funds just for college? Like, can you use it for meals at college? Can you use it for trips at college? or does it have to be just for the classes at college?
This is a great question. There are so many myths and misunderstandings about 529 college savings plans. That term college leads people to believe that these plans can only be used to attend traditional colleges. That's not true. So let's talk about the types of institutions. So yes, traditional 4-year colleges, but also 2-year colleges, trade and technical schools can be paid for with 529 plan investments, even registered apprenticeships, graduate school, professional studies. There's all kinds of schools that can be attended and paid for with these plans. Now, while you're at these schools that qualify for use with 529, you can use the funds to pay for tuition and fees, room and board, books and supplies, and even computers. And room and board goes beyond campus. Individuals can take money out of the 529 plan and pay for off-campus housing as well, as long as they're attending at least half-time. So there's a lot of things you can do with these funds, and we know college is expensive. We know there are a lot of expenses associated with it.
So that's what was my next question. So colleges are expensive. They go anywhere from, let's say, $30,000 to $80,000. If I'm doing a 529 plan for my son or my daughter, when do I start with them? Do I start as soon as they're born? Do I start when they're 18? And how do I get that amount of money? Because, let's just round it off to $100,000. That's a $400,000 bill that you're going to have for 4 years of college.
Another excellent question. First of all, whatever a family can save is that much less that the child will need to borrow and repay with interest. So I want families to feel encouraged, whether they started early or they're a little bit later in the savings process. It certainly is never too early to begin because, as you said, college costs are very high. Yeah. So the more time you have to accumulate funds and for them to compound and grow in value, the better. Many families don't realize they can even start a 529 college savings account before the child arrives.
Wow.
So a parent can put the account in their own name and name themselves as the designated beneficiary. And when that designated beneficiary enters the world and you have a date of birth and a social security number for the individual, you can change the beneficiary to the child. So you can start even before the child is here by beginning to save and then switching the account to their name. In terms of how late to start, I think it's never too late. I mean, certainly the earlier the better. Yeah. I would say when a child's an infant, that's what I did, is a great time to begin. But if you're somewhere else in the process, you're in middle school, you're even in high school, there are still a number of years left between the time the child will attend college and complete whatever the form of education is. So I say, get started whenever you can. Don't set yourself up to feel like you have to save 100% of it. There are other ways to fund college education, as you know, scholarships, merit aid, financial aid, student loans if you absolutely have to, but do what you can and get started as soon as you can.
Now, can family members help in this 529 plan? Do they, birthdays, graduations, anything like that? Can they just keep on putting money in from a lot of different people?
Absolutely. And I strongly suggest that parents tell those in their lives who love their children to please, cut out the stuffed animals and the toys and the games that are quickly outgrown in size or interest, those little outfits that are very expensive, and to instead consider contributing to the college savings account. The 529 plans make it very easy for account owners to invite others to contribute. They can send a barcode or a coupon code and that individual can contribute into the account. Loved ones can even set up their own account for a child that they really care about. Sometimes grandparents do that, aunts or uncles, a godparent. You don't even need to be related to the beneficiary. So you can go the route of contributing to an account that someone else has established for a child you love, or you can set up your own account and have complete control over it. And there are even gift cards that individuals can purchase and give to a child or the child's parents for the 529 account. Now that's handy if you don't want to ask the family to invite you to contribute to their account. You don't want to spoil the surprise. It's a baby shower or the child's birthday and you want to just surprise them. And these gift cards are, I have one with me, they're called Gift of College. We have this first of its kind gift card that can be purchased by a gift giver and given to someone who is going to be a future student. So these are available in denominations of $25 to $200. They're available online at giftofcollege.com. They're also available in CVS stores across the country and at walmart.com.
Really?
So if you didn't want to spoil the surprise and you wanted to give something a little bit tangible to a child, I actually hang these on my Christmas tree. Because they have that little sombrero space, and I give them to children in my family when they come to visit around the holidays.
So now how does that work? Someone just goes to Walmart or CVS and gives them $25 and it goes on that card?
That's correct. That's correct. And then the adult in the child's life can redeem it through giftofcollege.com into any 529 plan.
So how does that all work? They go to giftofcollege.com after they get this card, and is there a drop-down menu of some sort? How do they pick a plan that they want to drop the money in?
Right. So if the recipient of the gift card already has a 529 college savings plan, they would go to giftofcollege.com and set up a small profile through which they will redeem that card into their 529 plan. There's a drop-down menu of all of the 529 plans across the country.
Okay.
If the individual does not yet have a 529 plan account, we have tremendous resources on our site. We're not affiliated with a particular 529 plan. We don't recommend one over another, but we have a really useful interactive map whereby individuals can look at 529 plans both in their state and across the country, open one of those accounts, and then go to the drop-down menu and redeem this gift card into them.
Interesting.
Yes.
So now, what are some of the practical tips that people need to know about a 529 plan?
I would say individuals need to know that every state, except for Wyoming, has a 529 plan in which they can invest. The District of Columbia has one as well. They need to know that they do not have to invest in their home state's 529 plan, although there may be very valuable benefits in doing so. I mentioned to you New Jersey has a state tax deduction. Pennsylvania has a state tax deduction. New York, other states across the country, over 35 states. So you might want to look at your state first. You should look at your state first and see if are there any special benefits that you would receive by investing in the home state program. Mm-hmm. You can have multiple accounts for the same beneficiary. So a grandparent could set up an account, a parent could set up an account. You could set up an account in another state. If you happen to want to use your state's plan to get that tax deduction, but you really had your eye on another state's in terms of performance or investment lineup, you can do that as well.
And can you do multiple plans in multiple states?
You can do multiple plans in multiple states, yes. As long as you're not exceeding the anticipated cost of that particular beneficiary's education. You're really supposed to be using these accounts to save for higher education, and there's no reason you should be saving more than that amount might be. But you know those amounts are high, so you probably could use significant investments in one plan or another.
Now, is there ways when the student comes out of college to repay it through employers to employees?
So when students graduate from college, or their parents who are currently working while they're trying to save for college, there are ways that employers can help with this high cost of higher education. One way they can help is by introducing their employees to 529 college savings plans by having an expert come in and talk about the existence and usefulness of these plans. They can also offer payroll deduction to 529 college savings plans. There's research that suggests that individuals save a tremendous amount more when the money's coming direct from their pay into an investing account like a 529 account.
Yeah.
And in fact, there's been evidence that shows individuals save 75% more when they're saving directly from their paycheck into a 529 account than if they would be contributing in another fashion. I think that largely has to do with the fact that if you don't see the money, if it doesn't first pass your hands,
Yeah.
you're less likely to reallocate it for another purpose. So employers can help education, payroll deduction, and they can really help by matching an employee's contributions to these plans.
And now, what's the percentage that they can get up to that? Is it something like a 401k plan where they match it and it's 2% there, 2% there, or whatever it is? A max 401k, I guess, is like 6%. So can they do something like that?
The mechanism is similar to what you would do for a 401k plan, but 401k plans are under Section 401k of the Internal Revenue Code, and there are different rules about how much an employer can contribute and under what circumstances. For the 529 plan, there really isn't a maximum that an employer can contribute. But unlike the 401k plan, the contributions by the employer into a 529 account is taxable income to the employee. Now in the 401k, that's not the case.
Right.
But these accounts have such tremendous tax benefits associated with them in terms of the tax-free growth, tax-free withdrawals. I don't think there should be a concern that you have to pay tax on your employer's contribution. You'd rather receive your employer's contribution, right? So say the employer contributes $1,000 a year, but you've got to pay a couple $100s in taxes. You'd rather have that net amount of $800 or
Right.
whatever it is than to have nothing.
So that helps you lower the amount over time. So if someone comes out with $100,000 in debt, they work somewhere 10, 15 years, they could probably pay it off with that employer.
Well, the 529 plan, talking about what employers can do with 529 plans, the 529 plan can be used to pay down student loan debt, $10,000 of student loan debt. But there's something separate that an employer can do to help with student loan debt that's important to talk about. Under the CARES Act of 2020, and as extended by the Reconciliation Act of 2021, employers can now contribute $5,250 a year to an employee's student loan account to help pay down the balance. Now that's something. So the 529 plan's helping people to save, to avoid the debt. If they already have the debt, $10,000 can come out of the 529 to pay it down, but this is something totally separate. It's tax-free student loan repayment assistance under the CARES Act. Many employers are not aware of it. Many employees are not aware that that provision went in under the pandemic circumstances. And it's good until January 1, 2026, unless extended by Congress, which it may get extended. But what an employee can do is certainly ask their employer, are you aware that you can offer tax-free student loan repayment assistance under the CARES Act, and see if they'll do it. Employers themselves can put this type of plan in place, and they can contribute, as I said, up to $5,250 per year per employee towards the employee's student
Pretty
loans.
good.
So yeah, we've got 4 years left on it, 22, 23, 24, and 25, and that could be $21,000, right? If your employee gave that $5,250 a year. What's great is the contribution to the student loan account is made tax-free. The employee pays no tax on it. So no income tax is owed, no payroll tax is owed by the employer, and even better, the employer can take a business tax deduction for contributions to an employee's student loan account.
Interesting.
So that's really good to know. So I would say if you're an employee, I'd ask about support with saving for college with the 529 plan, and would your employer be willing to consider matching? I'd also ask, if you're encumbered by student loan debt, could your employer help you pay down that debt? And if you're an employer, you should be looking into all of this. We know the great resignation, the great reconsideration is underway. It's hard to attract and retain good employees. And having benefits like this, given the stress that higher education has, it's really valuable to consider offering these types of benefits.
Now, can employers also come to Gift of College and talk to you guys?
They can, yes. Gift of College has an employer use platform through which employers can offer 529 college savings benefits, can offer student loan repayment assistance, can match through our platform. So certainly employers can come to giftofcollege.com. Another thing that employers are doing, which is really very cool, is many employers have rewards and recognition programs for employees where you can give a colleague an on-the-spot award for going above and beyond, or a supervisor can give an employee some sort of recognition for a job well done, or for years of service, or some other milestone. Many of those recognition programs involve gift cards already. So now employers are starting to add Gift of College gift cards into those rewards and recognition programs. So when an employee gets an award and they're able to pick a $50 gift card,
sure,
the Gift of College gift cards are in the mix. So that could go towards a contribution to a student loan account, because our gift cards can be used to pay down student loans, or could be used to save for college. So that's great. And another thing that employers are doing is when new additions to employees' families arrive, they are giving both my book, Route 529, and our gift card to the employee as they go out on maternity or paternity leave to get them off to a good start for their child's future. So instead of the silver spoons that they were previously buying, or the $150 flower arrangements, they're really giving something very valuable.
So now, what's the mindset of preparing to save for these 529 plans?
The mindset is really important when you're going on any journey, I think, and particularly on a savings journey towards a goal that may feel insurmountable. I suggest people start with their why. You know, what is the reason for wanting to do this? I know my reason and my son's father's reason was that we didn't want our son to be encumbered by the level of educational debt that we had. We had over $100,000 in undergraduate and graduate school debt when this child arrived in our lives. And all we could think was, we don't want him to have the level of stress we have. So our why was really what we wanted to see was something different than the scenario we were in.
Yeah.
So start with your why, determine what steps are needed to achieve whatever it is. You don't have to save 100%. Maybe you want to save a third of what the cost may be. There are really wonderful calculators online that can help you determine what that is and back into what are the steps you need to take. But I encourage people to envision what they want to see, how it's going to look, how it's going to feel, and really embrace the steps that are necessary to get there. Another part of the mindset is not viewing this as some sort of act of deprivation, but rather a path to financial freedom. I think if people envision that they're not having to cut back on things and, not do the things they want to do for some bad reason, they're doing it for a really good reason. In fact, they're going to feel great in the future. And I can tell you how great it feels because my son has graduated debt-free from both his undergraduate degree and his graduate degree. Just this past May, he received that graduate degree. The June of the prior year was the undergraduate. It's exactly what we envisioned. It's exactly what we worked towards, and it feels great. So good. I think people need to develop that mindset. They need to embrace the fact that they're on a savings journey, invite others to join them, friends, family, employers, and just get to work.
So we're coming to the end of our show, and usually I ask my guests, what advice do you want to give to parents and the students that are watching this? What advice do you want to give them?
For students, if you've come from a tough economic background like I did, from a very low-income household, I want students to know whatever their current circumstances are, they don't need to define them for the future. And in fact, students that come from more difficult backgrounds really are full of resourcefulness and resilience. They've got more tools in their toolkit than they realize. So I want those students in particular to feel encouraged. Parents on any income level, I want you to know that you can make a difference in your child's future. You can look at ways to potentially cut back a little bit on some of your expenditures and begin to plan for this future higher education. And to keep in mind that you can make really good decisions when the time comes. The child doesn't have to go to the most expensive dream school that is unaffordable. There are many options. So I encourage both the students and their parents to keep an open mind, but particularly for the parents and other adults to start saving as soon as you can.
Great. Well, thank you very much for coming on the show. I really appreciate it.
You're very welcome. Glad to be here.
Yeah. So you've been watching The Secrets of College Planning. I'm your host, Anthony Uva. Until next time. Thank you.